Welcome to another episode of Financial 15, going back to charitable giving, and this time specifically looking at donor-advised funds. What are they? What are the benefits? How do we use them? Lots of great information. You definitely want to stick around.
As many of you may never even heard of the term before, and deals in the same similarities, foundations and stuff like that. But if you want more information on this or anything else that we've done in our Financial 15s, please go to our YouTube channel and subscribe. Also, if you want, there's lots of great content there. Very good videos, everything you need to. Like us on Facebook, and most importantly, please visit our website at beckerorr.com. We've got our videos, we've got blogs, we've got events, we've got the whole 9 yards for you, help you with your financial situation. But today we're dealing with donor-advised funds. And that's going to be the, what are they? How are they applicable? Can I use them now? Is there money? Clint, start us off. What are we dealing with when we're talking about donor-advised funds?
Yeah, it's not as well known, but it's certainly grown in popularity. So we'll talk about kind of what they're popular, why are they popular, some of the benefits, go through the key concept of what they are. Let's start with some background data here. They've been in Canada since 1950, so not new, been around for a couple of decades. But recently, we've seen a surge in popularity. The data I found was from Strategic Insight. It looked at the 10-year period from 2006 to 2016. So a little dated, but still gives us an idea. And in Canada, the amount of money in these donor-advised funds tripled in that time period.
Wow.
So you had up to $4 billion by the end of that time period in Canada. And we're still trailing the US, which has $78 billion in these donor-advised funds. So very popular in the US, growing in popularity in Canada. And might ask, well, why is this popularity happen here, Kevin? And really, you compare it to foundation, you're saving money. It's less costly, is what it is.
Yeah, that's the biggest factor. I mean, normally to set up a private foundation of some format, you're talking about millions and millions of dollars, and the administrative cost to orchestrate one of these things is huge. These can be done for a lot less, 10,000, 100,000, whatever the case may be, on the donor advised fund side. So it's sort of similar to what that foundation can do, but on a smaller scale and on a cheaper cost. And for a lot of people, that is much easier to deal with than trying to start their own foundation.
Yeah, and if you want to think about it, kind of like the mainstreaming of the private foundation, in a way it is. Private foundations really are set up for those that are very wealthy, that have millions of dollars. The average person, that won't be applicable, but for the average person, a donor advised fund could very well meet their charitable giving and tax planning needs. And that's the concept there. We'll get through the nitty gritty here, but if you want to view it as kind of some of the benefits of a private foundation, but on a scale that's more affordable, that would be a fit. So the donor advised funds, we just talked about private foundations only for the very wealthy. Donor advised funds give you some of the benefits of that, but you don't have to have millions of dollars to do it. You can do it with $5,000, $10,000, $100,000, whatever fits in your budget. Details here, often independent charities will host these. Public foundations will also have donor advised funds. Some financial institutions offer them. In Canada, there's dozens of providers for these donor advised funds, and we'll get into that in a second. But the key concept here, Kevin, the big one, why would we even consider a donor advised fund? It's separating the tax from the gift, isn't it?
Exactly. That's the big factor right there. Because normally if you're making the contribution, you want to go to the Humane Society, you give your donation, you get it, and it goes right to the Humane Society. And they're both coordinated together. So you know who's getting it, you know what's going on. Here with one of these donors advised funds, when you contribute, you get the tax decision or tax receipt, should I say, immediately. But where it's going, it can sit in a pool of funds, it can be invested, it can be a whole bunch of things, and you can decide later on down the road where exactly that's going to be. So if you donate to the DAF, as we say, immediate tax receipt, and at some point in the future that we're deciding where that charity and that money wants to go. So it's not combined, the immediate reaction for both. One is the immediate reaction to you for the tax receipt. The other one is charities that you may want to provide later on down the road.
Yeah, and that separation of the tax decision from the gifting decision, that separation is really the key benefit. You can do that with a foundation. With a donor advised fund, you can now do that on a smaller denomination as well. Again, lots of companies in Canada offer these. I'm giving you two examples there. Charitable Impact Canada gives. It's two big charities in Canada that allow you to set up donor advised funds under their umbrella, but there are lots. That's by no means an exhaustive list, just kind of tip of the iceberg there. So some of the keys here, Kevin, some of the benefits of the donor advised fund, we understand the big concept. You get this pool of money that you put in there and you're separating the decisions. But one of the benefits is flexibility. What do you put in there? It doesn't just have to be cash. If you want to put insurance proceeds, you have stocks, for example. You just want to slide those stocks into the donor advised fund. You have Bitcoin you want to put in there. Some of them allow you to do that. but it's a very flexible option. Essentially, anything you could conceivably donate to charity, you could donate into one of these donor advised funds. So very flexible. That's important. And then you mentioned this benefit. I'll throw this one to you. The key benefit here, separating the gifting and the tax decisions.
Yeah, exactly. I mean, at the time, you may want to make a contribution, but you really don't know which charity you want to give it to or anything along those lines. But you know you have to get it done before the end of the year, say this time frame right now that we're dealing with in December. I can put it in, I get my immediate tax receipt, and then I can decide a year, 6 months, 5 years down the road, okay, I've made the donation. I want to give the money to this people. So having that separation is huge. Getting the tax deduction for a lot of people is really important. It is as important to get that donation to the place you want to be, but it doesn't have to be done immediately. If I want to contribute to the Humane Society and I do it today, it goes right there. I get the tax receipt, but now I don't have any other options. Here I get that option by giving that separation of gifting and tax decision. So that's really a huge advantage that donor advised funds can give you.
And that's the key concept for the donor advised fund is you set it up through an organization. I gave you a couple examples a moment ago. You contribute there, you have a pool of capital that you can control, but you immediately get a tax benefit and you can decide what happens with that pool down the road. Some of the benefits of that is it allows you to be quite anonymous. So that pool of capital down the road, let's say 6 months later, I give instructions, this charitable impact, whoever I set it up with, say, you know what, send that money to this charity. My name doesn't have to be connected to it at all. Charitable Impact or whatever organization set up the DAF can just turn around, give the money to the charity, and I can be completely in the background if I so choose. So you have more control over there, over how public or anonymous you want to be when you have kind of that layer in between, right? Because you set it up with an organization.
That's right.
They're the ones actually following your instructions. So you have a level in between that allows you to have greater control over the anonymity if that's important to you. Another benefit here, Kevin, is some teamwork. We can all contribute.
Yeah, exactly. You can pool resources. I mean, let's use an example. Let's assume that Clint is putting together a pet fund, that he wants to give money to the dogs and the cats when anything goes on. If I think that's a really great concept, I don't need to set up my own. I can contribute to his donor advised fund and put money into there. I still get the tax receipt. The proceeds will be distributed where they're supposed to go to and at whatever time frame goes down the road. So resources can be pooled by more than one source. It's not just you giving. You can add with a whole bunch of other people into different donor advised funds.
Yeah, and to be clear, you don't give the money directly to the cats and the dogs. They don't know what to do with it. But that's certainly the concept, right? You can pool the resources, right? So if Kevin sets one up, and I think that's a fantastic idea, I can just put money into his donor advised fund. I still get my tax receipt, and then the money gets distributed according to the instructions that were set up there. So you can see it's kind of building up this mini foundation that is more accessible than the traditional private foundation, which is you need millions of dollars and accountants and teams of lawyers to get those set up, which gets us to the last benefit here, which is a legacy. You can set this up, contribute to it over the years. And let's say by the time you pass away, there's a couple $100,000 in there because you've done it for a couple of decades and the money's invested. You can then leave that and say, hey, I want my kids and my grandkids or someone else to help distribute these funds upon my passing. You can have a charitable legacy through these donor advised funds that allows you to do that if that's important to you. So you now have a tool to perhaps augment your legacy, have more charitable giving as part of your overall estate, which gets us to the motto, as always, Kevin, all these different tools, all these different options. What do you need to have?
You need to have a financial plan. You need to have a plan, period, of what you're going to do with yourself as you move forward, going into retirement, going through life and that sort of aspect. That's the most important thing. And as we mentioned here, with these donor advised funds, you can leave a legacy. You can contribute to a variety of different events. You can get a tax receipt immediately, and you can decide down the road whether the charities that you want are contributed to today, tomorrow, years down the road. Those are all huge aspects that can happen. But again, you need to have a plan to be able to get this set up. Don't just decide to do it day one and it's done. So having that plan is definitely necessary and needed going forward. So I think that concludes a lot of what we've done with donor advised funds. Clint, if anybody wants to get in touch with us on this or many of the other topics we've talked about, what should they do?
Right on the bottom of the screen there, chatwithclintonkevin.com. It's part of our webpage. You go there, you fill in the form that comes directly to us. We'd love to hear from you, whatever the question is. It's on donor advised funds. It's on a different part of the financial world. We're happy to take the question. Chatwithclintonkevin.com. Put it in the form. We'd love to hear from you. Any parting comments for the folks, Kevin?
Nope. Just to take care and start your own donor advised fund today.
We'll leave it there. Take care.